That can be a real burden for many of us. I know I've experienced it, and I know many others who have experienced it as well, given the current economic climate that we're going through. But with just a few smart strategies and some key tips, I'm going to show you how you can really get your debts under control and get yourself on the path to financial sustainability. So in this video, I'm going to share 6 ways that you can crush debt in the next 30 days and really put yourself on the right path. So here goes. Tip number 1, it's really important that you assess your debt situation. Now, if you're in debt at the moment, you really want to think about and understand exactly what the amount is, how much you're owing, and what it's costing you every month to pay that back, plus the interest. By understanding that, that's really the first step onto a path of financial sustainability. So what I want you to do is take a spreadsheet, for example, Microsoft Excel, and just list all the debts that you have. Maybe it's credit cards, you still owe, car finance, store cards, etc. Put all those down, put the total amount still owing, put the interest rate that is being applied to those debts, and when those debts are due to be paid back. And by doing that, you'll increase the awareness really of the situation of debt that you may be in. And that's really a good first step, because then you're able to put a plan around that to really execute. Now, tip number 2 is to create a budget. So if you're not already doing this, I suggest you list in that same spreadsheet in another tab your income. So what salary, for example, are you earning every month? Maybe you've got some income from dividends from stocks, maybe you're getting interest in the bank account, maybe you've got businesses that are bringing income, etc. Right, and list all those down so you know exactly on a monthly basis how much you're earning. And then list all your expenses that you're paying out. Again, go through your bank statements, go through any credit card statements, etc., and list all those down. Take your expenses away from your income, and hopefully you'll be in a situation where you're actually left over with some money every month, i.e. you're in a surplus. If you're not, go and focus on unnecessary expenses that you're incurring every month, on all the expenses. So you'll surprise yourself with things that you spend money on, whether it's shopping for clothes or coffees or whatever it may be, eating out at a restaurant more than maybe you need to, and cut all those out and get yourself in a position where your income is greater than your expenses and you're left with a surplus every month. And by doing that, you're going to put yourself in a really good situation for continuing to tackle the debt that you may be in. So tip number 3, build an emergency fund. And what I mean by that is really taking your expenses that you've just calculated per the last tip and multiplying that either between 3 and 6. So allowing between 3 and 6 months of operating expenses in a savings account, just untouched. So that should the worst happen, maybe your car breaks down or you have unforeseen medical expenses or other costs that crop up, you do have that emergency fund to help you. Other situations may be you lose your job or an income source dries up or whatever. But again, having that is really good. Personally, I'm quite conservative, so I actually like to have 9 to 12 months worth of operating expenses in a savings account. But people like to vary between 3 and 6 or 9 and 12, your personal preference in how you feel about risk. So do that and keep that money aside. Tip number 4, now you've got yourself in a situation where you know your debts, you know your budget every month, and you've got an emergency fund, you can now focus on creating a debt repayment strategy. So going back to tip number 1, where you listed all your debts, what I want you to do is focus on attacking the debt that has the highest interest rate applied to it first. Notice I did not say the debt which is the biggest in amount. No, I want you to go after the debt with the highest interest rate first. And the reason why is because that debt is accumulating the fastest. Just like when you put money in a savings account and you earn interest, so your debt is requiring interest to be paid on it. It's working the other way. against you. And so you really want to focus on paying the debt that has the highest interest rate first and attack that the hardest. For your other debts, just pay your minimum payments, allow yourself some breathing room so you really get after that debt with the highest interest payment first and get rid of that. Once you've got rid of that, then you can focus on the debt with the next highest interest payment, and so on and so forth. And by doing that, you will slow the rate at which debt accumulates and gets bigger because interest is added, and you'll be able to get that debt repayment and your debt amounts under better control. Tip number 5, try and increase your income where possible. So now, given in the inflation situation around most countries around the world, it's probably a good opportunity for you to ask for a pay rise for your boss or your line manager. If you've been doing extra work, you think you deserve one, see if you can get a little bump in your pay. Alternatively, if you can't do that, then maybe you might want to think about getting a new job that increases your income and weigh that up against obviously all the other things that you have going on in your life. But that could be a good way of getting a bump in your income. If you run your own business, maybe you want to think about increasing the prices of your products if you're able to, or starting a new business or a new product line to be able to kind of increase your income. The point being for this tip is increase your income where possible. Anything that you increase over and above what you have now goes in your pocket, and that surplus can be used to pay your debt down faster in the situation I described in the last tip. And finally, tip number 6, stay consistent and stay motivated. Now, consistency is the key here. If you follow the steps and you continue to work through them day by day, week by week, month by month, you really will put yourself in a fantastic position. Trust the process and know that it works, and it will. Just see it through time. Now, by doing that, you will put yourself in a fantastic position for getting your debts under control and putting yourself on a sustainable financial path. And the other thing you should do is, as you, for example, wipe off one of your debts, maybe you pay a loan off or you paid a card off, celebrate with a small victory. Maybe take yourself out for a dinner or buy yourself a small treat, obviously within reason, but treat yourself. You've done well. You should celebrate those small victories and keep doing that. It'll keep you motivated. So there you have it. 6 tips that you can crush debt within 30 days and really put yourself on the path to financial sustainability. Remember, getting out of debt takes a really good strategy, a good execution, and some time. Within 30 days, you will see a fantastic benefits and progress, and you just maintain that path and stay consistent and stay motivated. And you will be out of debt pretty soon and feeling much better and on your path to doing the things that you really want to do. I hope you liked this video. If you did, please click the subscribe button, add any comments, I'll be happy to answer them, and check out my other videos on creating the financial life that you deserve. Thank you.